Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Greetings, Algo artisans. It is Nick here, and it is 4:50 EST. It's Tuesday, and we have Natasha here, who is one of our newer clients who has been listening to us over at Rogue forever. Probably been following, V and CJ. So before I've even been involved with Rogue, you were over there. And as a newer client, you've never traded. This is completely new to you, is it?
Yeah, this has been a dream of mine, Nick, just to understand what trading is about, and to learn what the strategies are.
Wonderful. Well, first of all, thank you for your business. We're happy to have you. And if you talk to some of the clients, which we have our chat, we have our Telegram chat, they're all in there. I will spend the time to get people up to speed. And for people who are joining Algo Factory at this time, while the price is still $100, you'll have unlimited one-on-one coaching as long as we put the coaching on YouTube. It doesn't mean you have to have your face on here or anything. You can stay completely private, but it's unlimited one-on-one coaching that normally costs $400 an hour for a non-client, $200 an hour for client. It's unlimited for those who join. There's a link in the description. Check it out. Free Algo. You've probably watched my videos. We do the weekly video. We have all that stuff. We talk about, what to look for in the description. I'm not going to put you through all of that today. Natasha, what got you interested in trading?
I think it was, as a child, just very curious about what the stock market was and how it drove, the price of, things in the shop, why there was so much focus and channels given to it, and how it drove people's emotions. I was always been curious about it, and I just wanted to know, why does it matter to the world that we live in?
Well, emotions are key, and emotions are a very big conversation in the training that we offer at Algo Factory. So it's good that you're interested in those emotions, because that really is what drives the market. A lot of people ask me, AI, is that going to ruin trading? Is AI trading going to ruin markets for people who want to learn how to trade? Well, there are 2 industries where new technology goes when it comes to entertainment or otherwise. I'm not going to mention the first one because it's impolite, but the second industry is markets and trading. It's finance. All the big brains, all the new tech goes to finance first. So AI and algorithmic trading have been in this game for as long as those things have existed. And here we are, profitable on a regular basis. If anybody is watching my weekly shows, or especially our clients, they can see that I'm winning trades all the time. So fortunately, the AI hasn't ruined our ability to interpret the charts and to understand how emotions do drive markets. Right? So that's an interesting topic to start with. And I will say it very simply: fear and greed. Fear and greed are the emotions, and they are equally your friend and enemy, because they're your enemy if you let them rule your decisions in trading. They are your friend because they create market volatility and allow you to make money whilst trading, right? So as we spoke about before, we had a very lovely conversation, by the way, as we were talking about prior to starting this recording. The markets are an interesting beast, and we have a systematic approach. We take a look at all of the squiggly lines on the screen, and we do pattern recognition, and we use a very, very basic form of data science. It is data science. It's data science that anybody can really handle. There's no, you don't have to be like me and go to school for such things, right? You could be just about anybody as long as you went through high school algebra, what we call high school here. I think UK they call it secondary, right? Is that high school?
Yeah, okay. Secondary school, yeah.
So if you've been through algebra, basic algebra, which I learned in, I think I was 11 or 12, maybe, about that. You could do this. That's my whole point. You could do it. It's not that complex. So you were telling me a little bit about taking risks in life. So I invite you, if you're comfortable, to tell us what your view is on taking risks, how you feel about taking risks in life, and as it relates to trading as well.
I think I have been engineered by my parents to be cautionary, to not take risks, even though, as I was saying before in our sort of pre-video chat, my parents took the biggest risk of their lives and moved from one country to another. And
apologies for the noise. I have to mute that. Give me just one.
That's okay.
Apologies for. I don't mean to be rude.
That's okay.
Let's see. Mute. Okay. I'm sorry. Go on. You said your parents took the biggest risk.
Yeah, they took the biggest risk. They moved from another country, in the Caribbean to the UK. At young ages, my dad was 8 when he moved to the UK as a child, and my mother was 16. And they're, I would say they had very conventional, conservative, really good mindsets. My dad was a worker ant, and my dad was the worker bee, and my mother was the queen bee. Like both my parents worked. My dad was dedicated to work. He had an incredible work ethic, and so did my mother. But I think through the years they have engineered me, don't take any risk, go to university, go to school, get a job, just buy a house, just keep your head under the parapet. Don't do anything that will disrupt anything, because life is going to be very difficult. And so I think that has influenced me quite a bit, but I've been trying in my adult years to push back against that, and I've done some, I would say, incredible things. I moved to another country, lived in the Middle East after I got divorced a few years ago. My parents were a bit shocked, to say the least, because I got a job out there teaching, and I had to move within 3 weeks. And I remember my father saying, please don't come back wearing a Birkin. Don't wear a Birkin. And I said, if I was wearing a Birkin, Father, I would be wealthy. You mean a burqa? No, I'm not going to come back wearing a burqa. Okay. But
I don't want to be rude. I'm like, isn't it called a burqa?
Someone else like, don't come back with a burqa. But I think I just needed to break out of the norm. Even when I went to Russia, people said, why are you going to Russia? But I loved the culture of Russia. I wanted to see the country. And so and now I'm a British person, sort of living in Barbados, again, living in another country. I'm trying to break out of that norm and that fear factor. And I think trading, I think it will help me to have a strategy, face my fear, and deal with the fear of scarcity or being without, which does cloud my judgment a lot of the time. But also, I think it will temper my greed if I do it the right way, not to get too greedy. So I think for myself, I want to do something that's systematic, and I can see a strategy that's making sense to me day to day or week to week.
Well, that's the thing. I thought you were much younger. Growing up around the time that you did, this, stock market, this was always on television. It was like we talked about prior to recording. So I think a lot of people have this conception of trading where it's like gambling. Like, oh, you hit the button. Yeah, I'm winning. And anybody who behaves like this is going to find themselves short of money, because that type of emotion put into trading is it doesn't belong. Emotions are a beautiful thing. They belong throughout life, and the last place they belong is in trading. And we do teach people how to build trading bots. As a matter of fact, that link in the description shows you an algorithm that I built that can trade for you. Of course, you have to optimize it first, so it's not plug and play. I do find, though, that there's a level of discernment that I have while manually trading. So there's an advantage that I can see everything and make some deeper decisions than the computer can. The disadvantage is the fear and the greed that takes place. There are trades that, if I allowed the computer to trade for me, there are trades I simply never would have taken otherwise. Okay. So that, and they're winners. And there are other trades I may have taken that I shouldn't have, or exited early, or, there's a lot of reason to take emotion out of the equation. The point is, however, that even before you get to the point where you have put together your trading algo, your bot trading for you, learning how to trade manually, in my opinion, is key. It's actually necessary. So the process that we bring people through is, have a look at the charts. We teach you the basics. We teach you how charts work, all the lines and the, squiggly lines on the chart, what that's all about. We show you how to build an algorithm with that data, and then you will test that on historical charts. You go back and test it 200 times, or there are other instances where instead of 200 times, you might just do 5 years worth of history. It really depends on the way you're trading. But long story short, you will spend, some people do it in a few weeks because they have the time or they have the motivation. Other people might take several months to get it done. But you do a back test and you learn what's called your expectancy. Your expectancy is a number where, on average, every time you enter a trade, you're going to make this much money. It accounts for the wins, it accounts for the losses, and this is a number that takes time to understand. This is, but once you've gotten to the level of understanding that number, you are almost there. You're almost ready to deploy. So expectancy it's in the training, the Algo Factory training does give you that. But the reason we're doing this is because a lot of people who I've talked to, they go into the Algo Factory training. And while it is aimed at newer traders, like, trading is such a humongous, broad subject that I think it would be virtually impossible to teach everything. It's just, it would be thousands of videos because there's so many different ways to trade. There are different types of charts, different candlesticks. So I kind of put people on a path that I understand that's a very common path. And eventually what people end up doing is they sort of go off on their own and develop their own methodology after they have learned how to put the pieces together through our classes. And we do have some people who, when they get in, they might be completely fresh into the subject and they might have questions. So, Natasha, you've been taking these classes. I don't know how far into them you've gotten. Do you have specific questions that you would like to ask?
Yeah, I systematically, from the moment I signed up, I have my notebook next, so I'm writing notes. I went through the course. I think the burning question that I have is, which strategy will I know? How will I know which strategy will work for me? At this point in my learning, I think I'm more of a long trader. So I want to do, I think I want to look at buying more than selling. And I think I would like to start off with small amounts, not big amounts. For me, yes, I would like to have more determinism over my financial future and make money. But I just want to see if I can have a strategy that makes money and that I can test. So how will I know which strategy will work for me? Because there's so many strategies out there.
They're virtually infinite number of strategies. So are you going to trade stocks?
I am drawn to stocks. I'm drawn to Forex.
How British of you?
Possibly crypto, but I'm not sure.
I started off with crypto. I moved over to Forex because it is analogous to crypto. But this is a market. I don't know the percentage. I think it's like the vast majority of Forex settlements happen in the city of London. It's a very spread betting is a very British thing to do, and it's been my preferred mainstay for many years. At this point, I'm trading the NASDAQ because there's just a lot more liquidity and volatility. Now, stocks are one thing. Stocks are directional. So wanting to be long, wanting to speculate on the value rising with stocks, that can make sense, especially if you're not using leverage or anything, if you're just going spot. And what that means, for example, Forex, if you're going to trade, if you're going to speculate on the dollar going up against the Aussie dollar, it's going to be in fractions of a penny. Mm-hmm. So unless you have tens of thousands of dollars, there's really not a way to profit very much on such a trade. So Forex automatically includes leverage. And what leverage is, it's you're borrowing a certain amount of money to augment the size of your trade. And it's such a short time frame over which you're borrowing that money that it's going to cost you pennies, or, depending on your position size, it might cost you a few dollars. So you might profit a few hundred, and in the end, it costs you $2, $3, $5 or something along those lines, or pounds where you are. I don't know exactly what's going on where you are. I don't want to divulge your location or anything like that, but whatever the case may be, the fees are minuscule. And if you're going to trade something like Forex or even crypto, if you're a trader, this is different to being an investor, right? There's trading and investing. Investing is very long-term. Trading can be anything from minutes, days, hours, sometimes weeks. Weeks as you started to get into investment territory. But then, this is all semantics anyway. I think that as you begin to learn how these markets work, you may have a new view about wanting to only speculate on the price rising. Yeah. Because the mechanics are the same in both directions, and the opportunities will double for you if you consider going in both directions. Mm-hmm. So this might be a good time to put the screen up. Let me share a screen. So for the new traders, this is a good thing to see. This is the TradingView charting system. And this is the system that I use, that most sort of traders in the current day are using. There are other options. There's NinjaTrader. It's great. I don't recommend, one or the other. I'm not paid by any of them. I got a TradingView referral link. I prefer TradingView. I can trade directly on TradingView should I care to. You can actually use this charting system to make your trades. These have direct connections to a lot of very large brokers around the world. And if they don't, there are software solutions that will connect you and be just as effective. There are other options though. There's NinjaTrader, there's MetaTrader. I've used them all. They're all great. They all have advantages and disadvantages. I build my algorithms on TradingView. I know the language, the Pine script. The language on TradingView is a language that's dedicated towards this. The same with MetaTrader, MQL5 on MetaTrader. The coding script is, I think it's either Python or I think it's MQL4, MQL5. I think it's dedicated to MetaTrader. It's a little bit different of a platform to use though. I'm finding that most new traders prefer TradingView. In my opinion, it's more user-friendly. Do your own research, all your choice, right? So in the conversation about wanting to trade up or down, so this is a 4-hour chart. So if you look at the bottom of the screen, you'll see that we are looking all the way back, in this case, to February. You can't see that right now. March, April behind this blue. You got May, June, July, August. So this is a 6-month-ish view. And this is the NASDAQ. So let's talk about Forex because you mentioned it. We'll look at the euro. This is the dollar versus the euro. Really, it's the euro versus the dollar. So this is the euro in terms of the dollar. If you wanted to go long, okay, As a trader, I prefer to trade with the bias. So during this period of time, from April all the way to July, price was generally going down. So the bias was bearish. Now, I could only trade long trades. I could look for a trade in here, or in here, or in here where price was going up, and there are plenty of opportunities to do that. However, not only are we cutting our opportunities in half by only going long, we're actually doing worse than that because we're cutting them in half and we're going against the bias of the market. I prefer to trade with the trend. There are traders I know, successful traders I know, who actually will go against the trend. They're called counter trend traders. This is a way of doing things. As it is with somebody who's been doing this as long as I have, I'm a combination of both. I'm beyond those. I don't mean to sound the wrong way here, but I'm kind of beyond the simple view of trend and counter trend. But newer traders are wise to kind of stick to those terms. So this is just something to bear in mind. But if you do want to stick to one side of the trade or the other, you're certainly welcome to do so. There are traders who do that. This is not unheard of. When it comes to stocks, a good way to look at that is by looking at the NASDAQ. So this is the E-mini. So if you were only wanting to go long, if you only wanted to speculate the price rising from March, really April, all the way through, what is this, June, the end of May, you really only wanted to speculate on the price going up. I saw a lot of traders who got hurt speculating on the price going down. Now, from that early June through basically the end of June, that whole month, price basically went down. So this is the time when you want to be biased to the downside, right? So it's just stocks tend to be directional until they're not. They will have periods. If I were to go to a different chart here, where you can look through years and years of history of the NASDAQ, and I were to zoom out to say the weekly chart, you'll find that being biased long is very healthy. This is going back to 2008. Prices did almost nothing but go up on the higher time frame. So a lot of the stock traders who we work with, or who I just simply know, they tend to have a long bias, as you were talking about. So there's that question answered. Now, what you asked, the other question you asked was what strategy, right? Yes. So the strategies are infinite. There are price action traders who simply look at exactly what you see on the screen and nothing else, right? So they would probably look at the 4-hour chart, and depending on how they do things, and they would look for certain structural areas where price might make a move. So for example, if I were to take us back through time to here, so we're looking now at Wednesday, the 3rd of June, I can look back and I can see that there are times when price moved up and down on the way up. For example, you have this spot here where it kind of bounced and came up, and you have this spot here where it bounced and came up, right? So those areas are where price is going to want to reverse again. For example, this is a major one right here, that level right there. So as a price action trader who does not use any type of indicators, any type of mathematical, we'll talk about indicators in a minute, then somebody like that would merely use a couple of tools. They would use candle theory, which is understanding how Japanese candles work. And there's a whole science to that. And then they would use these areas where price bounced. So for example, if I were to go to, let's go back in time all the way to here. I'm going to grab our bar. So we're going to go back in time to like here. So we're pretending that we don't know anything that happens after this, right? So price came up, made a bounce right here, a very clear move down, and a very clear reversal upwards. This is a very clear bounce, right? This whole mess right here is not very clear. Now you can map it out. It's doable, but it's kind of, it's not very well defined, but you can see a very clear defined move up and down right here. And this area right here where price bounced before is known as a support at this point. It's structural. And price, if you look back here, as a matter of fact, you will notice that it actually fell right here in the past. Well, would you look at this? Price came up, bounced right at that same level, more or less, right here. So you have this older pivot, and again, we see a pivot and a move back up.
Yeah.
Understanding these pivots, we can also know that price probably, if it were to come back down, might come back down to this level, at which time we could look for a long position where we would speculate on the price going up and perhaps make a long or a buy. Well, we know the future on this one, so hindsight is 2020. And if I had that, I would be a multi-gazillionaire and own Mars. But this is not reality. So let's go ahead and hit the play button. We see price doing a few things. These Japanese candlesticks, I did a class on these candlesticks, a very cursory class, right? We didn't do a very in-depth candle theory class because we're indicator-based traders. We need to know the basics of candlesticks. We definitely need to understand price action, support resistance. We teach all that stuff that I just basically talked about, the structural, the pivots. We teach all that in the classes. But to give you an idea of what price action traders do, they would take a look at, in this case, what is called a bullish engulfing candle. Okay.
Yes.
So price came up and price was making a consistent and solid move up. And then you have this wild candle that I'm going to put a box around this candle right here. So this candle is a bigger candle than the bullish candle before it. And for those who are super new to trading, bullish means like price wants to go up, bearish means price wants to go down. So the bulls will gore with their horn upward and the bears will claw price downward. Yes, you got it. I like it. So that being the case, this candle, this second candle, as compared to the one prior to it, this is a bullish candle and this is a bearish candle afterwards, and it is bigger than the prior candle. Right? It's closed. It actually look, candles usually, technically, they're supposed to open at the exact same levels they closed, but oftentimes they don't because of what we call slippage. So right at the time this candle ended, there were no more buyers and price rocketed up to open higher. So this really is a true bullish engulfing candle. Now, what does that mean? That means that the body of this candle is bigger than the body of the prior candle, and the wicks also go higher and lower, if my memory is correct on the definition. And that bullish engulfing bearish candle tells us that price probably is going to go down. So even if we only saw this right here, this is all we saw, this candle just completed, we see a bullish engulfing candle after a move up, that means price may reverse to the downside. Now, the trend in this case is upward, right? Price has been going up for quite some time. So the trend trader would look for price to pull back and then head back up in the same direction. That's what a trend trader would do. A counter trend trader might try to go short right here and catch the move down, right? So we're going to think like trend traders because I don't want to confuse too many people. And we're going to go ahead and understand that a bullish engulfing candle at a move up is an indication that price may go down. Now, we're going to talk a little bit more about candle theory so we can understand how a pure price action trader trades, somebody who does not use indicators, which we will briefly introduce towards the end of this show. Now, what they're going to look for is another candle, and that next candle must close below this candle, which that's the close. The bottom of this larger rectangle is where the candle closed. Now, at some point in the life of this candle, in that 4 hours, the candle went all the way down to this level, but it came back up and it closed here. So the next candle must have a lower low So the bottom of the large rectangle must be lower than the bottom of this bearish engulfing candle. And the close, the close must be lower. I don't know that the low must be lower. Yeah, it's got to be a lower low, lower close, right? Pretty sure that's the rule. I have not traded price action in many, many years, so this is all dredging from the memory. We can even look up the rules. So the next candle is a lower low, lower close, regardless, right? So we have the candle body, the red rectangle is lower, and the low is lower than the prior candle. This means the price probably is going to go down. So we have a solid thesis on the price heading down. Those who would go short would probably go short at this time, but they would want to be out prior to this structure that we talked about earlier where price bounced on the way up, right? But we're not talking about that. We're going to let price come down to this level and look for an opportunity to buy. And sure enough, because we know the future, we see price bounces right here. And then we can use some more candle theory. I would say you have your bearish candle right here, your last bearish candle, and then a bounce right here. You have an indecision candle. You have a hammer. So I would look at this bearish candle and I would look for a close, higher high, higher close. So the next bullish candle to have a higher high and higher close than this last most recent bearish candle before the bounce is our signal to get to enter. And here is that signal. So we would enter up here, have a stop loss somewhere probably down here. And then we would use some very basic tools to measure how far we would take this trade. I would use, and don't get too confused here, folks. This is where the classes come into play. We're only showing you this not because I want you to understand how to do this at the end of the show. I'm just going to give you a preview to the tools that we use so that you understand that we have the tools. I would use a Fibonacci extension on this, and my targets would be here and here. I would make sure that there is enough meat on the bone for the trade, meaning that I'm not risking a large amount to a small amount. And then I would simply take the trade, right? Next bar market. Now it might, meaning that as soon as the next bar hits, I'm into the trade. So it would be right about here. And we hit play. And ultimately, I believe this trade goes our way. I'll just hit play and we'll see. We're on very slow of a play here. And we're still biting our nails here because that's just what happens, fear and greed. Once you become like true trader, you will no longer bite your nails, right? Or at least you'll bite them a lot less. No promises on, even I bite my nails at times. I wear a heart monitor. We lost the trade. Unfortunate, right?
Yeah. Because it went lower than the stop loss.
This is the stop loss. So this box, now as you can see, it actually ends up going our way later. But this stop loss is interesting, right? So this concept of a stop loss, and I'm glad that you already know what it is. If price, so if you just let price continue down, you're going to lose a lot of money, right? You might even liquidate your account. It's no bueno. Because if price goes down, how do you know it's not going to continue? We are trying to take bites out of this market, little bites, right? Now, in this case, you are going to, let's reverse. Let's go back in time. What we want to do is to have a planned entry and a planned exit. And we use structure. And I just kind of willy-nilly put this together, right? I didn't really measure it very much, but we have a point past which price goes and we cut our losses, and that is the stop loss. And that is the bottom of this red box on the price chart. So if I get rid of a lot of this noise, a lot of these lines, okay, if price goes down past here, we cut our losses. And the way that we measure these trades is that we know that price probably will not want to go below there, but maybe I don't know, 3 out of 10 times it will. You'll lose 3 out of 10 trades and still be very profitable, right? It's very common. People stop out all the time. People lose trades all the time. It's just part of being a trader. We design these though so that there is structure there, so that price probably will not want to go past here. That's why we cap it off a little bit below that structure, because price tends to not want to break structure. And there are other measurements. And then of course we have our take profit, the top, the green, right? Now you'll notice that this green box is much bigger than the red. And in fact, we know the ratio is 1.6 to 1. So if one were to design their trade size, right, you would design your position size such that if you lose the trade, you lose a certain amount of money. And we can talk about all the details later, but let's just say you design this such that you're risking $100. If the price goes out of your range, if you stop out, you've now lost $100 or 100 pounds. If price were to head to the top, you make $161. It may be hard to see on this screen, but this green box is 1.6 times larger than the red. So we have a lopsided risk to reward ratio. So what we aim to do is we win more often than we lose, and we win bigger than when we lose. And this is how we stay profitable despite losing 3 trades out of 10 or even 4 trades out of 10. Technically, I know people who are at a 50% or less hit rate, meaning that they lose half or more of their trades, but their risk to reward ratios are lopsided enough to where they still are profitable.
Makes sense.
So, this, I know I covered a lot of ground. I wanted to go over the very basic style of trading. I wanted to go over price action trading because you're asking about strategies. So we talk a little bit more about that, and understanding market structure. We have classes on it. Whether you are trading price action or with indicators, it doesn't matter. You need to understand market structure. Now, there are indicators you can build that will take market structure into account. Market structure being these pivots that we talk about, because they're very important to where price will go and where it will not go. Right? There are now coded indicators that look at market structure. Even so, I believe it is far better to understand them organically rather than depend on a computer to tell you where they are. And I have had a lot of people approach me in the last couple of years, especially the last year or so, since AI has become so prevalent. And they're like, asking me to give them some clues. Hey, join Algo Factory. I'll point them in the direction. I'll send them some stuff. But they get to the point where they're taking enough time to where I'm going to start charging. And then they don't want to do that. They just want to use AI to build an indicator and go be profitable. And out of the 10 or so people I know who have done so, there are not one of them who have become a profitable trader. And it's because they do not go through the basics. They do not learn the basics of trading. And the basics are what you're seeing right now. It's literally this price action, old school trading, right? So that is a strategy. We are primarily indicator-based traders. Again, referring you to the link in the description. That link does show how I build an algorithm. I think I use 2 indicators in there, right? So, and of course, in Algo Factory, we do teach indicators. So as strategies go, there are a couple of ways to think about the term strategy in trading. One of them is, you're going to be a Forex trader, you're going to focus on long trades, and you're going to be a trend trader. You're going to trade with the trend. You're going to be I'm not sure what your schedule is like. Most people who have, a job or income or a business, usually they're swing traders. So they're looking at the chart on the 4-hour time frame. They're spending about an hour on Sunday just reviewing everything, kind of making a trade plan. And then they will, on Tuesday, Wednesday, and Thursday, they'll spend 30 minutes before the market starts to set up their trades, 30 minutes after to do the same, and to monitor. And that's about the amount of time they spend every week. It's roughly 3 hours or so a week trading. That, once you have everything ironed out, is about the amount of time that swing traders actually spend trading. It's about 3 hours a week. But the fact remains that strategies must be developed before you get that far. And indicators I have found to be extremely useful when combined with price action. So you have a strategy of, okay, I'm going to be a swing trader, Forex, longs only, Tuesday, Wednesday, Thursday. I'm going to stick with this pair. That's a strategy of sorts. But then we actually have to develop your algorithm. So, I use the term algorithm, and a lot of people, their eyes glaze over and they think there's like supercomputers. And no, it's very simple. Tying your shoes is an algorithm. Going to the store is an algorithm. You leave your house, you take a right, you take a left at Main, you take a right at Burgess, you take a right at, Clark, and then the store's on your left, and you do those exact things and you will get to the store every time, unless, one of the streets is blocked. That's an algorithm. Okay. So the way that I just described that trade with the price action and the candle theory and all that, that's an algorithm, right? If condition A, then action B. If condition C, or if, whatever. Condition A, action 1, condition B, action 2, so forth. Indicators are a new bit to the mix, right? A new ingredient. Have you gotten to that part of the training yet?
Yes, I have. I was looking at different, and I sort of reviewed them today, sort of volume, different indicators. So volume, moving average, RSI, relative strength index, and average true range, ATR.
Those are great. Those are very good beginner indicators. You can build successful algorithms with that data. You could totally do that, use those, be successful. It's all about how you combine and use that information, right? So, have you played with them at all?
Not yet. I have got a basic account on TradingView.
Okay.
I've been trying to work out, doing some paper trading, but I thought I would just do the theory, and then have our first lesson, and then sort of bit by bit start to paper trade, play with the theories that I have, or just work out a formula and then see if it makes sense to me.
So at this point, you're going through the theory. We've talked a little bit about strategies, what they are. We've talked about the very, very basics. We've talked about, what you might want to trade, what it is to use leverage, whether or not you want to go long or short. There's some very good basic things to cover on a first lesson. As as we go through the rest of the show today, is there anything specific you'd like to know about?
I would like to know, could I have a bit more reference to going long and short positions? So I understand the red area is your stop loss, green area is you lock in profit, and then there's a middle part that is risk toward ratio.
Yes.
So I just want to understand, okay, have the confidence, where do I place it? Because again, I'm a little bit unsure, where do I place if I decide to go long or short, because now I'm thinking I could probably, like you said, Nick, consider going long or short so that I don't cut out another part of, making a small profit, or at least testing a formula and seeing if it's correct.
Sure. So let's say that you have an algorithm that tells you to enter a trade. And let's say that you're going to go long in this case. And let's say that your algorithm tells you to go long right now. So let's zoom in on this. We'll say that your algorithm said, okay, go long now. So you would, in this particular case, that candle right there ends right here. So if you were waiting for that candle to end, which some people don't, you would enter right at the bottom of that candle. So you would put your box, that box, I call it a box. It's what it's really called is long position. So you put your long position tool, and the entry would be at the bottom of this candle body right there. Now your stop loss would be probably below this structure, and we use ATRs to determine that. And there are many ways to do that. Different class. And your take profit target, where you think price will go. This is a pretty high time frame trade. Let's see. I think, man, that's a tough one. But it's not very clean. But I'd say, is this right? Yeah, this would be right. We'll call this quick and dirty, right? So your target would be up here. You might take some profit off right here. These are Fibonacci tools, which we teach how to use that. And don't be too nervous if you don't understand this tool right now, okay? So we'll give ourselves a stop loss right about there. We have our 2.9 risk to reward ratio. So our long tool, our long position tool here, you have a stop loss at the bottom of this box. You can see the corresponding red number over here on the screen. And that number is 28,392. This is the NASDAQ. So if price goes below here, you're out of the trade. We have our take profit, and we'll just use the 1.618 fib level as our only take profit in this case. And that is obviously up here where this blue line is. And that number is 31,158 if you looked here on the right. So if you look at this long position tool, you'll see this risk to reward ratio at 2.91. So our position size is usually going to be 2% of our entire book. So your book, let's just say you start off with 5,000 pounds. So 2% of 5,000 pounds is going to be 100 pounds if I'm doing that right. I'm pretty sure it's 100 pounds. So we risk 2% of our entire book because it's just a common number to use. Some people will use 3%, some 5%, some 1.5%. It's, it's ultimately going to be according to your risk tolerance, right? But let's just stick with 2%. It's a common number. And what this means is that if price were to make its way down to your stop loss, you now lose $100 and your book went from 5,000 to 4,900 pound. If price were to make its way up to your take profit, you will have made 2.91 times 100. So down here, if you lost, you have risked $100. That's a $100 risk, or 100 pound risk if you had stopped out. So we'll make that yellow. However, if you win, because you see here, again, it's very small on the screen, but it's a risk to reward ratio of 2.91, meaning that this green part of the long position tool is 2.91 times the size of the move down. Mm-hmm. And therefore, if price were to go to your target, you would profit $291 pounds.
That's starting to make sense now. Yeah.
And this is why we have high risk to reward ratios if we can. I have algorithms that will profit 85% of the time. However, the risk to reward ratio tends to be closer to 1-to-1. Maybe even sometimes inverse, right? So you can have an inverse risk to reward ratio, which means that you're risking $100 to make 72 or something, right? That can happen. That's mostly for people like me who've been doing this a long time, and I have a method that wins like a lot of the time. And so therefore I'm scalping, and I've done this for so long that I understand the risks and everything else. So that said, as a newer trader, I think it's good to consider limiting your risk to reward ratio to being 1-to-1 at the least.
Yes.
So that you're risking 100 to make 100, double or nothing.
Yes.
So therefore, you would need to create an algorithm, a trade plan that is going to have what we call a hit rate, a success rate. You're going to want to win at least 60, 70% of your trades.
Right.
If you're at a 1-to-1 risk to reward ratio. Now, I wouldn't be too precise. As you're building your algo, as you're starting to discover which indicators you like, or even if you're not using indicators, as you're building your algo and you're starting to figure out how you want to trade, I would not be too precise on the risk to reward ratio. I would not need it to be 1.68 or better, or whatever the number. As long as it's above 1-to-1 and ideally closer to 2-to-1, that's fine. That's good.
Mm-hmm.
It is not the linchpin on which you should place your strategy.
Understood.
It just needs to be a range that's acceptable.
Could I just ask the terminology of scalping? What does that actually mean? Because I've seen it in the chat, but I don't quite know what it means.
Very short-term trading.
Mm-hmm.
In and out in minutes.
Oh, right. Okay, taking those little bits of the cherry.
Just nibbles.
Just nibbles. Just
nibbles.
Got it.
Yep.
That's where that language comes in, the preciseness of language. Got it.
Yep. Nibbles, little bites.
Yeah.
Mordidas. Yep. So you do that. Scalping is something that most of your strategies will start to break down once you get to too low of a time frame. So this is the 4-hour chart. And if I were to go down to like the 1-minute chart, what you see is as I expand this, there's a lot of noise, especially at the end of the day. Let's delete this. But you'll see a lot of noise. There's a lot of wicks. There's a lot of chop. So scalping it's an art in and of itself. I scalp, however, I'm scalping based on data coming from the 3-hour chart, the 30-minute chart, the 5-minute chart, the 1-minute chart, the 10-second chart, the 1-second chart. It's all data combined now. I don't trade the 1-second chart. I don't trade the 10-second chart. I really don't trade the 1-minute chart. You could say that I do, but this is starting to get into the realm where you've gone beyond simple definitions, counter trade versus trend trading, whether you're doing that, it's gone beyond that. At that point, I'm looking at data on the screen. And once the conditions are met, I enter the trade. And once those conditions for exit are met, I am now exiting the trade. This is you in 2 or 3 years if you really, really stick to it.
Got it. Makes sense.
Right. So scalping is something for full-time traders who sit in front of the computer. And I will tell you now that most people who make a lot of money trading are not doing that. Most people who make a lot of money trading are starting with larger amounts of money, and they, not necessarily larger, but they are swing trading. They have careers. They trade in a higher time frame. They are doing like I may have mentioned earlier. I did mention it, where on Sunday they review the market for about an hour. They look for potential trades coming up on the Forex market, if it's Forex, for the coming days. And then for 30 minutes before the open and 30 minutes before the close, often only on Tuesday, Wednesday, or Thursday, they are managing trades, looking for entries and such. Those people make more money than just about anybody in the world of trading. But you do have the odd person such as myself who is doing this all day long, and I make money scalping. Yes, absolutely.
Makes sense. That's how
most people who scalp are crackheads. They just lose money. They're gamblers.
Now it's making much more sense to me. If I may add like a analogy, a film analogy, when you say to, instead of just getting a program, an algo just to do it, learning the handbook, learning it stage by stage. It's like film editing. I learnt film editing, sitting with a screen with all the different buttons and the effects and going through them one by one and cutting my films myself. And now we're in a society where somebody just programs something in and it edits the film, but they don't understand why has it cut this way. And I am more aligned with learning the handbook.
Yeah, you want to actually have some tape and tape the film together and
Yes.
a little screen. And yeah,
Yes.
I'm using CapCut when I edit videos. So,
Yes.
I'm like one of these young kids who edits film. And then when I say film, it's, I'm just doing YouTube videos, different world. That said, there's the next level of that analogy is somebody like myself. Nowadays I'm using AI a little bit more. For all my shorts, I don't have time to do the shorts. I used to do them manually. If you look at Rogue, you'll see some shorts a little bit higher quality. I chose the images, I refined the images, I spliced them in with transitions. And then what I've done now is just as a function of schedule is I just tell the computer to make the shorts.
Yes, absolutely.
Right.
And so if you're using CapCut, I'm using Adobe Premiere Pro or not FileMaker Pro, Final Cut or DaVinci, yeah. And I had to teach myself. I find it easy on Premiere Pro because I can just move around, but I had to teach myself the different sort of layout workflow on DaVinci. And again, it's a bit slower. And so that's what I equate this to. I'd rather learn the traditional handbook so that I understand why do I want to make this move now instead of an algo just telling me, make a move here.
Garbage in, garbage out. Pilots learn on 1950s airplane. This is the way, and this applies to AI as well. The best AI prompters are coders because they understand how to code, so they can tell the AI at a much higher level what to do when building their code. This also comes down to when I build an algorithm. Let me bring out one of mine. Is it on this one? I'm just going to try to bring a screen out. Anybody who's watched my videos, sees the algorithms. Let's see if this one. I'm looking at a screen that you cannot see right now. I will fix that problem. Okay. Let me share this screen. Okay, so let me come out of this orange area. Okay. If you can see here, these little green arrows, this one, that one, this one, that one, are telling me to go long. And they're mostly profitable. There is the occasional loser, the occasional dud, as there is with any trading. But here's a winner telling me to go short. This is a loser telling me to go long, or I might scrape a little profit out of it. I call those losers. Pretty big winners right here, though. Big winner, big winner. I call this one a loser. Big winner here. Right. So you have these losers where I would be out of the trade, but with like a 5-2, there's actually 2 in here. If I had like a 5-to-1 risk to reward ratio, I would lose $1,000 here and I would make $5,000 here. Right. So even the losers get paid for by the winners, but these arrows are based on code. Now, the original algos that I used way back when, I paid a guy in Perth, to a friend of ours, a friend of the show who's been watching V since 2012. He built it. And he actually is, he's another Londoner I know, he was a music producer actually back in the 80s. So he built some of my best work Algo wise, but he, once the AI came into play, I'd say earlier this year, I refined, which I'm building new stuff all the time, to be honest with you. I'll go through these periods where, I'll just build an algo, and it'll be a week, and I'm just sitting here like, all cracked out, like sober, just mentally cracked out, just getting it right. And this algo that I built, I sent him the code, and he's like, it's cleaner than anything else that I can do. Not that I know how to code, but I know how to talk to a computer. I know how to tell the computer the proper conditions. I understand language enough to where, and watch the bottom of the screen now, all of this information at the bottom of the screen, these are indicators. This is the MACD right here that I've exploded. This is another couple down here. I can tell the computer in a way that it understands what these conditions are. I know enough about coding to do that. And that just comes from a little tiny bit of experience, but more about going through building these indicators manually. Building these algorithms manually. So when I had my coder code it, I had to tell him, for example, condition number 3 might be that with the MACD, let me make this visible for you. This is for the audience here. And this might be the last concept for which we have time today.
Yeah.
Let's do this. And that's not the right one. What have I done? Signal, zoom, MACD, signal. This is the one. Okay. So I would tell him the MACD line, which is in this case the blue, must be below the signal line, which is this orange, right? Must be below the 0 line, which is between, which is where the red becomes the green up here, right? And if those 3 conditions are met, then this trade is eligible for a short entry as long as other conditions are also met. But the way you say that is so MACD line is less than signal line and less than 0, less than value equals 0, right? So I know how to speak the language, like value equals this, or greater than, or they must be in this order. There are also filters, so going through and building these manually, once you have mastered that, or even once you're at not even a full mastery, perhaps a higher level of novice, you will then be able to go into AI and use that language to produce your algorithms, as I have. And it will spit out the code for you. It's going to look, I don't want to reveal my source code on this, but it's going to look like code, right? It'll be pretty awesome. So if I were to leave you, and we'll leave a moment for a final question for you, but if I were to just kind of give you or anybody a bit of advice, this is not a process you can rush. There are 2 things about trading that you cannot rush. One of them is the process itself, and the other thing you cannot rush is the trading itself. The trading itself is like surfing. It is literally exactly like surfing, which I did when I was much younger, and I still do once in a great while. My dad surfs all the time, all throughout Central, South America, and the Caribbean, but I just haven't gone with him lately. Long story short, though, you got to wait for the wave to come to you.
A lot of my friends are surfers, and that's what they say here.
This exactly. So it's you. What are you gonna do? You don't surf a bad wave. You only surf a good wave. Well, this particular case, and there is an entire literal analog to surfing. You have a process. You go through. If the wave it looks like this, then you are going to swim in this direction, and you're going to take this left, take that right, and if you're about to hit that rock, you got to get out before that happens. Like literally, this is like surfing. You're just surfing money waves instead of ocean waves. But you need to be patient. You need to let the opportunities occur. You need to let it come to you. Now, with trading, with the learning process, there are some things that you can rush. One of them might be the fact that you can backtest pretty quickly. So you can, if you like coffee or very strong tea, could just simply caffeinate and stay up and get all of the back testing done in a matter of weeks. One of our clients, Larry, I think he back tested within a week, all 200 tests. The live testing, though, is where you're testing with either very small amounts of money or no money at all. And of course, you just have to wait for it to come to you. So there are some processes which you can speed up, and others that you cannot speed up. And you need to be patient. This is a marathon. It is actually, it's a lot more simple, right? Once you have these concepts down, and they are not very complex concepts. If you eat the elephant in small bites, it turns out it's not really an elephant. It's just a very large cow. And you will have those concepts, and then you will your ability to progress, it becomes exponentially faster.
Understood. That makes sense.
So, but did you have anything, more that you'd like me to answer before we end the show?
No, I think I've I can see parts of it making sense now, like where it was a bit foggy for me. You've kind of brought the sunlight to it.
Lovely. I love bringing sunlight to people. It's like my thing.
Yeah, it's starting to make sense, because it was, like you said, just lines and lots of different sort of things on a chart, and now I'm understanding a bit more the terminology, and things are just becoming a bit clearer for me. So at this point, I don't think I have another question until our next lesson.
I make fun of dorks, but I actually have a bit of a nerdy slice through me. There are many things I've done in life that are not nerdy at all, like such as being a trained fighter for many years and being a musician. And there are other things that are extremely nerdy that I've done through my time. Now, part of that is looking at those lines on the screen and being very, very fascinated with them, rather than put off. Like when I first saw this stuff, to me, it's like, oh man, I love every single thing about this.
Yeah.
All those lines, all that stuff. I want to know everything. I was insatiable. And not everybody is going to be like that. And what we can do, though, is there's a trick that my mom does in her professional life, and she tricks herself into really liking her job.
Yeah.
So if you don't necessarily like, or let's just say you're a little bit put off by some of the technical aspects of these charts, fool yourself into thinking that they are really cool. And even if that doesn't work, understand they'll make you a lot of money one day.
Yeah. And I've even been telling myself, Nick, like, I will master this. I will look at a chart and it will speak to me. Like, I will see things, I will see patterns. I'm literally just telling myself that. And now I can see little by you using these different analogies, it's clicking to me slowly, where, as I said, it was very foggy and I just couldn't make head nor tails of it.
Well, I'm glad that is the case. It looks like my prediction has been, again, rather accurate. You've been with us for a couple of weeks. I know that we were both dealing with a few things in our personal lives as you signed up. But if you've been watching the predictions I've made, have been pretty darn accurate actually for quite a long time now, but especially the last few months. So I predicted this move this morning. And just so you understand, like, predicting this is not really that easy of a thing to do. Like this, for anybody to predict this, even though it's not exact, it didn't go exactly where I said it would go, to understand that it would move in this manner ahead of time, predicting the future is a great way to make money. So I'm sure there are people who are far better at this than I am. I just don't know who they are. No, I'm just kidding. Just joking. There are people who make a bazillion dollars doing this that are far more talented than I am. But I will say that I'm good at what I do. And for anybody who wants to learn what I do and has the dedication, I will spend the time. I will spend the time to make sure you're successful. And you can ask people in our group. I'm there. So I look forward to more of these. And if you're available next week at the same time, we can do this again.
Yes, I am I think it's another analogy, hopefully it makes sense, but I met a friend when I was working in film, and he was a rugby player. And I was curious about rugby. I'd never been to a match before, and he said, I'll take you to the match. And he actually bought me the rules book. And from that moment, I was probably like mid-20s, I was hooked on rugby. And he said, I've spawned a monster. So I think you may say the same thing about me, Nick, that you've spawned a monster, because I was just asking so many questions, and I was just curious, watching games and just watching the different techniques. So I feel like I feel more relieved now and excited to know more. So
lovely. I could not ask for a better outcome or a better attitude. I once pretended to be a rugby player.
Really?
I did. I was not really. It was. So what happened was, I was a competitive bodybuilder at this time. It's probably 2012, 2013. So excellent shape, and as rugby players are, right? So I'm in Las Vegas, and I was trying to get to know one of the waitresses at the hotel, and that wasn't happening. But there are these but I was doing rather well at it. She just simply wasn't allowed to talk to guys at the hotel, or she told me that to make me go away. I don't know which one it is. There were these guys kind of sitting by the table and they go, man, she was really hot and you were doing really well. And actually they're Kiwis, so they used a different accent than that. And so I was talking to them and I'm like, well, you guys want to, like, because I was there with my family and they were all like older married guys. And so they didn't care to try to go out and have fun. And so I asked these guys, I'm like, hey, you guys want to go out and just, try to meet some girls? They said, sure, yeah. And so we'll go. And so I said, all right, like, what's our story? And like, well, we're rugby players. I'm like, oh, cool. I said, I'm not a rugby player. They're like, you are tonight.
Yeah. That's impressive a lot of people.
And they're like, the way you're built, you would be good for sevens. And I'm like, sevens?
Oh,
and
yes.
I had to realize sevens, right? Sevens.
Yes, sevens. And the funny thing about Kiwis, they say, like, let's go and have a barbie on the dick.
Yes.
And they
They love to compare their dick.
Yes.
Yes. I've got, my dick is much bigger than yours. Oh, right.
Yeah.
Your wife built your dick, didn't she?
Yeah.
I've got lots of sunshine on my dick.
Yeah, exactly.
Yes. So, for the Americans out there or elsewise, we're talking about a deck, D-E-C-K, but it's
a wooden one. I've used wooden.
Your dick's made of wood?
Yeah.
A weed? No, weed. That'd be Scottish. Weed. That's like Glasgow. Yeah. Weed.
Yeah. Oh, yes. The accent is very thick. And yes, it's making sense now. And I think I'm being more open-minded now to be more flexible with a strategy. So I'm going to wait until I kind of, nail my flag to the mast of what my strategy is. I want to understand the market trends and understand the patterns before I come up with a sort of formula. But I feel that I will be able to make a formula that I'm comfortable with.
There's a phenomenon in nature where a predator will become visible to, say, a flock of birds. Mm-hmm. And that flock of birds will go like this. They'll make a pattern to where the predator just gets confused and doesn't know which one to go for. It works on humans too. I used to hunt upland game every year, which is basically dove, quail. And so when it's almost easier when 2 or 3 dove fly across your radar than 50 of them.
Oh, yeah.
Because you just have one to aim at. So when you're getting into this trading, at some point, choose a path. You don't have to stick with the path.
Right.
There will be a time when you need to stick with the path and you don't want to be willy-nilly. There will be that time.
Yes. And
one of the common mistakes that people make is that they want to play with new toys, right? Oh, they found this really cool indicator that someone on YouTube, like, how many people have asked me, oh, what about fair value gap? What about fair value gap? And I said, I don't want to hear about it. So fair value gap was a fad in the trading world recently, and everybody was asking me about it. And I even looked at it myself. And what it does is when you start to see new toys or new strategies, and some guy will put his face on YouTube just like I do, but his face will be like this on the thumbnail, right? Like, okay, we know you're surprised.
Yeah.
Okay, you're psycho, whatever.
That phenomenon has come from.
I don't want that face teaching me how to trade. Thank you.
No.
But it'll be that like, oh, I made $10,800. Well, I actually have videos where I did make $10,800. But what I mean to say though is that's what the video will say. They'll have, I made this much using this strategy with this one indicator, you know.
Yeah.
And of course, people, wow, I can make money. What I've been doing has been very difficult and I haven't gotten through it. And maybe this is just an easy way that I could shortcut. Okay, anytime in this game where you think to yourself, hey, that looks easy and this could be a shortcut, you are going to lose time and probably money.
That's very true. And I'm trying to stay away from the overly animated, excitable stories, but what I make in a day trader. And I want something that's systematic and that I can manage my emotions, that I can get in control of my emotions for sure.
Absolutely. You're on the right. I mean, you have the right mindset. Somebody else said this and I paraphrased it over the years. Trading is done properly when boring.
Oh, I've heard that before. Yes. I think you said this in one of the videos. I'm sure I heard you mention this.
Many times.
Yeah.
Yeah. By the time you're a professional trader, it's pretty boring.
Yeah.
You're not, the trade's on and you're just waiting for it to either stop or go. You're going to take profit or stop loss. And you've already done, 8 this week and the probability of whether or not it's going to win. And you're just, the conditions met, and you hit the button and then you go make tea.
Yeah. I kind of want to get to that stage, which is how I see when I'm filmmaking or editing. Just putting things in, letting it sort of play out, thinking about it, coming back, readjusting, and then just kind of being still with it. So, no, I found that really fascinating, and I'm not feeling so nervous anymore, Nick. So thank you so much.
Wonderful. It's been a pleasure. Thanks for doing this, and we will see you next week.
Thank you.